So I'm gonna be breaking down my VIX 100 strategy or 75 and step index strategy using just pair price action and market structure. So here are a couple of flips that I actually end up doing. This is one of the big flips I end up doing, was basically 1300 to 40k. And if you guys see it scrolling up, I kind of traded crash and then I was like, get into step. So I've been trading step and then volatile 75 and then also a bunch of step index as well. Here's also another flip that I end up doing as well. This was done in a day using the same price action strategy and everything that I'm gonna be pretty much showing you guys as well. But this is actually a 10k day that I end up doing, also trading same thing, V75, mainly STAP as well. Those are really like the go-to ones that I actually been trading lately. Also 100 V100 as well. But as you guys see, I kind of did a withdrawal of 3,000, and then I had two big losses, which was those like 1,500, I think it was 1,300. I can't really see it, I know I was scrolling too fast. But here's a couple other ones I did, a couple other little flips I also did as well. Decided to withdraw 9k out this account as well. So yeah, you know guys, so that being said, I'm pretty much just going to be showing you my strategy that I use. So this is going to be part one of many parts. If you guys like this, just make sure you drop the like and subscribe. Let's get to it. So what's going on? It is your boy Solo. In this video I am actually going to be giving you guys a strategy on how to actually trade VIX, and I'm talking about any volatility pairs from 100, 75, 20, I believe 50, 100s, 300s, even STAP index. And also if you guys wanted to trade like the other ones like jump 75, jump 100, I'm gonna be breaking down everything on how to actually trade this. So when you guys are watching this isn't going to be like a strategy where, you know, you use moving averages, you use Ichimoku cloud, you use this, it's got to cross over that, it's got to cross that, get too complicated. And I'm pretty sure you watching this video because the strategy that you probably seen on YouTube, which I've seen a lot, probably isn't working anymore. And the reason, because the fluctuation of market changes so much, strategies doesn't really last as long. But when you guys do it the way I'm gonna teach you, you can become profitable. So you already seen the flips that I have done previously with trading this, so you guys should see that the credibility is for sure there. And I'm gonna just go straight to breaking it down, so let's go ahead and get to it. Okay, so here we have it. Right now we are logged into actually VIX 100. I decided to do this besides 75 because it's going to be a little bit easier to understand the process. So first and foremost, if you guys don't even know anything about what I'm actually talking about, I'm gonna actually just link some information down in the description. You guys can read upon that and check it out for sure. But basically what this is what they call synthetic indice. It's just like a mimic of the actual live market, like, you know, your Forex pairs, your US 30, NASDAQ 100, S&P 500 indices. It's kind of like a mock of that. So that's pretty much really what it comes down to. Now, for those that don't know, I do use a lot of price action and market structure to actually trade and take a lot of my trades. So when it comes to that, I do like to have a naked chart. I don't like to have too much going on. If I really use any indicators, it would be really two things, either the moving average or the RSI. Volatility, once again, is very volatile. And what I mean by that, guys, if you are used to trading Forex pairs or indices or even crypto, you guys know when it comes to trading this is what happens with stuff like that. You see market comes up, it does an impulsive wave, and then you'll get a little pullback, and then you get the next impulsive wave. After usually you get your second impulsive wave, what happens is it starts consolidating or ranging for a little bit, and then it does the next impulsive. That's not the case with this. With this is more so like impulse, 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 impulse. Little correction. Even in the corrections, it'd be very, very huge inside of it, and then you get another impulse, impulse. So what does that mean for me as I transition from Forex, even trading into this? Because I'm not gonna lie, when I trade this, I trade it a little differently as far as how I enter, what entries I look for. With Forex is a little different because it's more steady with Forex. So with this, how it works is very simple. We need to focus on two things. One is having a RSI, and when you guys are looking to get an RSI, you want it to come up top here where you see indicators. And then when you come up top, you want to get the RSI. Now the RSI input that I'm using is length at 16. You guys want to make sure you have that. Now another one that you guys can get are going to be your 2 moving averages. They're going to be EMA moving averages. You guys want to make sure you get moving averages exponential. One is going to be set at 9, close as for the source, offset is at 0, and the other is going to be at 21. And then the close is for, that's the source, and then the offset at 0. So after we establish that, now I just want to do a perfect markup of what we're looking for before you guys can just start. Don't skip the video, because otherwise I promise you ain't gonna understand what I'm talking about. So let's talk about the perfect world first, and then we're gonna jump into the live market. So with volatility, any volatility pair, 75, 100, what happens is markets tend to do very impulsive moves very rapidly and very fast regardless. So what we do is very simple. We first identify our strong key levels on a higher time frame, like the 4 hour, even the 1 hour. Now for me, I'm actually going to be doing this, and we're going to be jumping from the 1 hour to the 30-minute, 15, and even the 5-minute. We have to look at all time frames because they have to correlate. We can't just stick to the 5-minute. That's probably why 90% of y'all is watching this video right now is like, man, the strategy worked before only on the 5-minute. The reason why is because market comes up fast, comes down fast, comes up fast, comes down fast, and it's not going to always work if you be in one time frame. So on a 4-hour time frame, we're going to be looking at 2 things: key levels and movement. What do I mean by key levels? Key levels is wherever you see price was acting as support and resistance at the same time. That's a key level. Another thing we're looking at is movement. What movement is what I mean by, if you're seeing prices already as far as an uptrend, we know that market is in a uptrend, so we should be more biased to buying opportunities than selling opportunities. Or if the market is going down, we then know that the market is in a downtrend, so we should be more biased to selling opportunities than buying opportunities. So we have to realize this first. Now, after we establish that on the 4-hour time frame, what we need to now establish on the 1-hour time frame is this. So 1-hour time frame, we need to see price action reaction. What do I mean by that is, on the 1-hour time frame, we should establish either is price going to either have a wick at the close of the candle. Remind you guys, this has to show once the candle closed. Do not try to get in the trade while the candle is still active. 5 minutes, 10 minutes, even 1 minute in, because with this type of index, you have to be very cautious and prepared because it moves so rapidly and it can literally throw you off. So you will want to enter in at the close. So we look for wick rejections. If we are biased and we have a story created knowing on the 4-hour we see market is shooting down, it's going down, it's a downtrend, we should be looking for wicks to show at the top on a 1-hour time frame. Because now since we understand that, all right, we got a wick rejection on the 1-hour candle at close, what then we're going to do is 2 things, and I'm gonna break that down in a little bit. But after you establish you have wick rejections, that's when you can jump on the smaller time frame, like the 5-minute. We usually just jump straight to the 5-minute, 15-minute, and kind of look for our entries, either to sell or buy. So if the market is if we're looking for buying opportunities and we notice that it's an uptrend, we need to see wicks at the very bottom so we can determine that the sellers are not as interested in the market as they should be. Buyers are interested in the market. Once we see that, we then wait on the candle to close to confirm that it is still a valid wick rejection, a tail at the bottom. After that, we then hop on the 5-minute, look for our entries and all of that. We're going to break that down in a little bit. But after you establish that, everything else is pretty much straight to the point once we look for the entries. So let's say that we got a bullish engulfing candle, meaning this candle is going to be green, and we know that we see buyers in the market, and then out of nowhere, market still shoots down. That happens quite often actually with VIX, stop and jump, but there's a way around it. So what this means is, if you guys see a engulfing candle, the previous candle has to at least show wick rejections. If you have a bearish or a bullish green candle, the previous candle must show a tail at the bottom. If you have a tail at the bottom and a tail at the top, and they're both equivalent, the same size, so let's say that you have something like this, almost known as a spinning top. I know a lot of people might know this as a spinning top. Do not just take the trade off the 1-hour. What we're going to do is jump on the 5-minute time frame, and then we're going to wait on some other confirmations to take the trade. So that is pretty much what we're only looking for in the 1-hour time frame. So now that we established that, let's go ahead and talk about what we need on a 5-minute time frame to enter. So now on the 5-minute time frame or the 15-minute time frame, anywhere between those two time frames, we need to see the same exact thing that we seen on the 1 hour after the 1 hour candle close, or we can also wait on break of structure. So let's say that we got one of this here. Let's say that we got a wick rejection to the bottom and we got a bullish engulfing candle. So let's say that we got that. Now we want to go ahead and take a buy, but before we do that, what's going to actually happen is, this is how we're going to get our perfect sniper entries, is after, guys, this is what happens too. So after we get this bullish engulfing candle on the 1 hour, on the 5-minute, what's going to happen is now our RSI is going to come in play. Our RSI is going to show us two things. It's one, is going to say it's overbought, and then on top of that, it's going to also establish and say we might have divergence. So let's say that we had got a close on the 1 hour time frame with this candle, which is this bullish engulfing, but on a 5-minute, you guys see that my RSI is going to basically be telling me that it's oversold. So then now, or overbought, sorry. So then now on the 5-minute time frame, what we need to see is, this is what's going to happen. Price is going to be shooting up, and this whole movement right here is probably going to be, all these 5-minute candles are going to be equivalent to an hour, and it's going to show that bullish candle. So then now on the 1 hour, so then now what we need to do is wait on the 5-minute pullback, guys. So the 5-minute pullback needs to be above the previous higher low, which is over here. So if we then now see the same reaction that we have seen on the 1 hour, like what I mean by that is wick rejections, engulfing candles, this is where we then take our buy, and then now I use the Fibonacci to figure out my next TPs. Once again, I'm not going to really get into that because that's going to be a little bit more complex. But if you guys actually align this up with previous structure, so let's say that we had a high here and we had another high over here, we can then take our TPs to those levels. So now that we established that we got the same exact thing that we seen on the 1 hour, we then now jump on 5-minute, we can then now enter. So that's pretty much how I trade and how I was able to flip the two accounts that you guys seen. And now let's just show you, let me just break it down in the live market so you guys can see exactly what I mean. So let's go ahead and get to it. All right, so we are now on the 4 hour time frame, currently live with, like what I said, V100. So we're just basically looking on two things. Once again, what we're looking for, we need to see, is this an uptrend or a downtrend? Right now it is an uptrend. I know a lot of you guys that know about head and shoulders and all of this will basically say, look, this is a head and shoulders pattern. One thing I teach is you really won't know until it actually breaks the support line, which is basically this here. So if it breaks this, then we will be looking for some selling opportunities. But until then, now I am only trading what I currently see and not what I think. If you guys were to just take a sell, you are literally trading off what you think and not what you see. So what I see is that price is shooting down, but we don't have structure being broken based off of this support level right here. So we're just going to wait to see what happens. But also, I said on a 4 hour we look for major key levels. So I'm going to look for see where we can basically we can find these levels. So we have a level here. This is a very active level. Why? Because we have resistance and support, and resistance over here. Like what I said, I need that resistance and support to act. Also, I like to have two levels because I like to have it in between just in case. I don't like to be all the way down here because it's kind of irrelevant. Price is all the way up here. So I just like to focus in a moment. So in a moment, I see that this is also another key level for me because we have support, and resistance, and acted very well off that. So now I know we're playing in this little zone area for at this time being. Now if this hourly zone level was to break, that's basically what I have set over here. I will then be looking for another level to the downside, and let's just see what we can find down here. So I'm just really looking for areas where price had hit multiple times. So we see right here we got support, and then also kind of over here we have support and resistance. So this level is very, very valid for me. So now that I created my story on the 4 hour, what I then do is jump on a 1 hour, and this is where I start looking for these confirmations so I can get in a trade. So now I know the trend is up, but we could still see maybe move pushing to the downside, but we still have to be aware because of this little support level that we created on the 4 hour time frame. So then now really we might not have much opportunity, but I'm actually going to talk about a trade that I did get in earlier today, and made profit off that trade just because of some stuff that I identified. So we actually had got in a sell which was off of this move here. And the reason why we got in this sell is because, guys, we have wick rejections. Now, I told you guys to get the 2 moving averages. I really haven't mentioned the 2 moving averages because I don't use it as a confirmation for me to enter. I just use it as another confluence that I have as part of structure and support and resistance. So I noticed in this area we had a wick rejection, and I told you guys this is what I'm looking for, wick rejections. So I noticed we had a wick rejections off of this move right here, and I'm gonna highlight this because we're gonna actually go on a smaller time frame and look at this on the 5 minute to see the entry. So we had a wick rejection. Also, I noticed that moving averages is acting as resistance. So now that I see that it's acting as resistance, what I then do is jump on a smaller time frame, and we're just going to actually jump to the 15-minute first. Actually, we jump on a 5 minute. So now on the 5 minute, you guys would have had, let's say if you would have had got in. Now, if this was an engulfing candle, it would have basically said that it was oversold on the RSI. But since it wasn't an engulfing candle, it was a wick rejection, which same thing we look for. Cool. So then now here, guys, on a 1 hour, we know that we are in heavy resistance because wick close. I'm going to take my entry once I get the setup. So I noticed that right here we got an engulfing candle. We noticed price didn't break this high, but most importantly, the reason why I mainly enter off this trade is because of the higher time frame gave me that confluence of what I need to look for to enter. So this is one opportunity that you guys could have got in right here. And then how I look for my TPs is very simple. I use my Fibonacci and align my Fibonacci with structure. So I draw my Fibonacci from point A, which is the previous high, to that previous low, which is here. And then I look for these 2 levels to see if these 2 levels align with previous structure. And then from here, I always like to take my TP with, especially trading stuff like this, to my 618, and as you guys see, this aligned it perfectly with previous structure, and we smashed that. And then that was my trade that I took for today. So that was one trade that I took for today. And then I'm actually going to show you guys another one with V100 that I also took. Okay, guys, so here's another one that I took earlier. This was, I believe, yesterday. I took this one because of the simple fact we had got an engulfing candle. Mentioned this earlier in the 1 hour. I need to see wick rejections, engulfing candles, and so forth. But we got the engulfing candle, so I'm gonna highlight this because I want to see on a 5 minute what it will look like. So then now I'm just not going to take my buy immediately because I like to actually, one thing when I trade this, and I know a lot of you guys are going to ask me, how the hell did you get 1300 to 40k in 3 days? Yes, I did over risk my account, and the reason why I'm saying that I like to look for these tight entries is because I do tend to over risk it a little bit more, meaning like I like to risk a higher percentage, almost like 10 to almost 15% of the account. I know that sounds cliche, or I know that sounds ridiculous to a lot of people, but the way I trade is I trade normal. I have normal trade 1 or 2%. Sometimes I do up to 10%. If I know what I'm doing, I know where market's going, guys. If you've been trading for as long as me, why not try it out? You know, obviously it paid out twice. So here's the move that I mentioned earlier. So for me, what I like to see is, like, again, I want to see price pull back because I want to make sure I get in at a really tight entry. So we didn't really get a pullback all the way until here. Now, for me, guys, how I trade is I'm very patient, and I do have the patience. I'll rather wait for a really good entry, and if I don't get the entry, I just don't take the trade. So honestly, guys, when I seen price just kept shooting up, I missed out on all this because I just wanted to wait on price to shoot further down to create, once again, the moves that I have mentioned in a smaller time frame. So I look for price to break structure, and I also look for engulfing candles. So if we look and pay attention here, guys, what actually ended up happening was we did get a double, and this is why I say sometimes you got to be careful with these engulfing candles, because if we were to enter right here, this move would have stopped a lot of people out. What I like to do is wait on structure to break. So if I get a move like that, and there's 2 ways that I enter, the one I showed you before and this one. So I then just start drawing out my line and waiting on structure to break on a smaller scale, because on the 1 hour I already established that we're biased to the upside because of that engulfing candle here. So I'm just drawing out my lines here to see when it's going to break. I noticed that we never broke structure here. We never broke structure here. We look like we created a double bottom. Once we get the double bottom, that is another confirmation I look for, but not as much with synthetic pairs or synthetic indices. So we got the double bottom. After the double bottom, I waited on a breakout, and then I waited on a retest, following up with an engulfing candle, which is this right here. Also, guys, if you pay attention at my moving averages, I use them as active support and resistance, and we pretty much got that. And then now what I've done, or what you could do, is either draw your fib point from point A to point B, and then you can use these two levels to take profit. So since this move was so far back from the previous high, I decided to take profit here instead of all the way up here because I'm not greedy. I actually put a standard in this, and the standard in this is a lot of pips, guys. So that's pretty much that. So that's pretty much what I do. One of the ways that you guys can actually trade V100. Now this is going to be a part one of many parts. I decided to do series on this, put it on my YouTube channel and everything. Now if you guys really want to know more info on how to actually mark up this is the exact same thing. I mark up my charts the exact same way as I mark up Forex and crypto. The way that I actually enter off this is a little different than I enter off of Forex. With Forex, it's a little bit more neutral, more casual, meaning that the moves are more steady and slower. But with V100, you have to be on point, especially if you're entering on a 5-minute time frame like myself, or the 15 minutes. So that being said, if you guys ever want to learn about this, I do have a course. You can check it out. I do have everything about breaking down market structure, price action, all that stuff in there. Also, we do give out signals now with all of this, because I know there's a lot of people that I teach and a lot of people in my YouTube that actually trade this now. So that being said, I said, why not? I'll go ahead and put it out for those that actually is trading this. You can go ahead and use the signal. So other than that, guys, I appreciate the love and support. Your boy Solo. Take care, everybody. Peace.